It's Thursday the 28th of December 2017. I've decided to jump onto the other FTP. Haven't been trading recently for the last several days, obviously through Christmas and stuff, but got a bit of time here, even if I'm with the little man, so I thought we would jump in and do a bit of trading, and demonstrate what I'm doing as well, for what it's worth. So here is CL. I'm also in 6B, and this isn't the live account, this isn't the funded account, this is the other remaining FTP, which is way behind. It's below zero, but we've got enough drawdown to work ourselves out. So won't bother with the explanation for 6B because it's a bit more complicated, but CL is quite straightforward, same concept. I'll get out the pen, just a second. Where is it? Yeah. So you have lower high, lower high, low, lower low, so you got a downtrend there. You also have a big old reversal candlestick against this downtrend channel, and this is the key thing for me. Big old reversal candlestick says we're going to keep going south. Then let me get rid of this pen. Then a negation of that reversal candlestick, i.e. a trap, because lots of people will have tried to short this on various time frames. Turned around, trap in the first instance here with this, the next candle after the trigger candle to the downside, and then we got a break of this downtrend channel as well, as you can see via the wicks. Then you got a solid close above the wicks. So once that was up there, I just looked to the left for structure, and I put my entry at a wholesale place that would be a trigger for the trap in the first instance. So you could have gone long 59, I chose 58, just because that's the candle that created the higher low off of these lows here. You got low, lower low, higher low. So that's the first reversal candlestick after the higher low. And then I just measure, I looked for where the stops would be if I would be shorting this, and that is for me 5% above this high as measured from this high to this low. 72 down to 44 is 28 ticks. 5% of 28 is half of 2.8, which is 1.4. Round up to the nearest whole tick, because this is CL, and that's 2 ticks, because 1.4 becomes 2. 2 above 59.72 is 74. So risking 5 ticks from 58 for 16 ticks, or a 3.2 to 1 reward to risk ratio. And that's it. That's about what I do every day. It's as simple or as complex as that. Same thing going on here with 6B. Same idea, I won't bother going through it. I have my way of annotating the charts, like this dotted line means something, the solid line means something else. But what I just explained on CL is the gist of what I'm doing. So I'll pause for now and then wrap up this video as and when this trade completes itself. I do have a dynamic risk management, so that doesn't mean I'm holding, I'm all in and all out at all in obviously at the entry and all out at target. There are reasons why I would take the trade off sooner, so we'll see how this pans out. Pausing for now. If I see 71 on the last 71 print, I will move the stop to 68. Otherwise, I'll wait and see what happens. Back if and when whatever unfolds. So I just got out there at 68. I tried to run the video to catch it, but it was just getting too long. I did see not 71 on the ask, but I saw 71 on the last, but I saw 71 on the ask, on the offer. And if that's the right term, the offer, the ask. And I saw that smash down, so I knew that that was time to get out, like what I saw in the level, on the, not the level 2, but the time in sales. So that's why I got out at 68 for a 2-to-1 reward to risk ratio. That wick here combined with this wick means it may well go on to 74, but I'm not going to stick around if I've already got 2-to-1 as per my plan. So that's it on that trade, and we've got 6B left. Don't know if I'll bother keeping this video running for that. Maybe I will, maybe I won't, but for now I'll pause and see how it goes. Worst case scenario, I'll give back 50 and be up $50 on the day between the two trades. So that's it for now, pausing for the time being. So as you can see, that did hit 74, it's gone through to 75, but I'm fine with that because it's part of the plan. 2-to-1 rather than 3.2-to-1. Pausing for now. So I took a loss on that last trade. I actually did exit. Let's look at the what do you call it? The markers. So I exited this for one tick, less than break even, or minus one tick essentially. Would have hit my stop here anyway, and I got into 6C and that stopped me out. So there were losses there. And then one CL trade, but of course it's just a shame that this time it didn't get me to 74, as that would have more than absorbed the losses I took in the other two trades, the scratch trade and the full stop. So this time it didn't work out that way. 68, let's see what would have happened. Even if I had waited for 71, as we were saying, you would have got 71 here on this candle, and then this candle would have come down to 68 in any case. So there was no way to avoid that that scenario. So that's it. Nothing more to say. That's an example of the method. Of course, we can work it and look out for how we can run this and stuff like that, but it's a work in progress. Does have positive edge, 2-to-1 on the win, scratch, and -1 on a loss, leaves me with a positive expectancy over these three trades, and this is representative of what I'm doing every day. Some days will go well, some days won't, and they blend out to positivity over time. So that's it for now. I'm going to throw this video out actually no, I'll see if I dress it up a bit, because maybe it'll be boring without the music. So that's it for now, and I'll be back probably at this point. If I might do one more of these before the new year. So that's it for now, and back at it. Well, there's only tomorrow, so if I don't do tomorrow, then I'll be back in the new year. Take care and see you then.